What an absolutely crazy shit show when it comes to SoFi. Yesterday, SoFi had another amazing quarter. Probably quarter three of 2023 was the best quarter that SoFi has ever had in its short career. This literally was a triple beat, the same as quarter two of 2023, the quarter right before this. We beat in revenue estimates, we beat in earnings per share, and we increased guidance. And we're essentially reiterating that quarter four of 2023 is going to be our first partial GAAP profitable quarter, following but a full 1 year of 2024 of GAAP profitability, which then can lead to many other things. It was by all measures an absolute slam dunk. And in today's video, I want to go over the earnings results and I want to talk a little bit about price movement. Because to be honest, yesterday pre-market, SoFi is up 13%. Market opens, SoFi is still up 13%. I think it even hit 14%. And lo and behold, 2 hours later, SoFi is flat and essentially finishes the day even. Fast forward today, and SoFi is up, as per making this video, literally 8.8%, trading at $7.56. Absolutely freaking bonkers. It's absolutely freaking nuts. And obviously, there's a lot of things to do right now with the geopolitical uncertainty between Israel kicking Hamas's ass, Yemen vowing to enter the war and destroying Israel, Russia and Ukraine, China, tension with Taiwan, Azerbaijan, Armenia, so on and so forth. It's not stopping. So probably investing in a finance company or a fintech might not be on everybody's mind or the smartest move. For me, it's a no-brainer. I absolutely love SoFi. And let's go over the earnings right now. And you guys can make up your own decision. As always, this is purely entertainment and education. None of this is financial advice. Make up your own minds. If you make money, good on you. And if you lose money, shame on you. Do your own due diligence. Do your own research. For me, SoFi is absolutely a monster. And I added to my position, taking advantage of the unnecessary dip, because as the price of SoFi did not go up or went down yesterday, the fundamentals of SoFi just became so much more stronger. Everything in SoFi, everything under the sun when it comes to SoFi earnings, hit it out of the freaking park. Let's take a look at the screen and you guys let me know in the comments down below. Please make sure to tell me in the comments down below what you guys think or thought about the SoFi earnings. This is a quick synapse about what happened, but we're going to go a little deeper. They recorded GAAP and adjustable net revenue for the third quarter 2023. GAAP net revenue was $537 million. That's 27% up. Adjusted net revenue, $531 million, also 27% year over year up. Guys, you might think that SoFi is slowing down their growth because I believe last quarter we were right around that 40% or the quarter before that one. But this is amazing growth, 27% year over year growth. It's absolutely freaking bonkers because they keep exceeding expectations, raising the bar, similar to what HIMS was doing, actually. And HIMS is doing. By the way, still bullish on HIMS, guys. Don't think I forgot about HIMS. I still hold HIMS. But SoFi keeps raising the bar, increasing their guidance, and keeps smashing it. This is great right here. Their recorded adjusted EBITDA of $98 million is up 121%. EBITDA is earnings before interest, taxes, depreciation, and amortization. This is essentially the money that your company is making from like operations before all fancy accounting and before taking into account a bunch of other numbers. So the higher your EBITDA goes, the closer you become to GAAP profitability. And GAAP profitability is generally accepted accounting principles. So GAAP profitability is EBITDA profitability after doing all of the fancy accounting tricks. Now, some people might not understand this. SoFi reported 29-cent loss. But the loss is because of goodwill, which I'll explain to you in just a moment. And their actual earnings per share loss is 3 cents. The expected numbers were between 6 and 8 cents. So by all intensive purposes, by all measures, SoFi absolutely smashed numbers. Now, some people don't understand what goodwill is. Let me try to explain it. So whenever you buy something or you pay for a company and you're paying for something that's above and beyond the actual value of the company, let's say, for example, you buy a company, the company is worth 100 million, you pay 105 million, and you're paying 5 million for material, I don't know, drawing boards and pens and markers and computers and chairs, things like that. That can be a goodwill impairment. I'm not saying that's the only thing. I'm just giving you guys a very simple example that you guys can understand. And what happens is you take that as a loss because you're overpaying for the actual underlying company's value because you're buying stuff above and beyond the actual company, the worth of the company. Does that make sense? So some people think we got a 29-cent loss. We didn't. We actually got a 3-cent loss. So although this is only a one-time fee and we're still going to become GAAP profitable next quarter. This one was absolutely freaking huge, guys. We added 717,000 new members. That's up 47% year over year. A new member is a customer, somebody that uses SoFi, and then we cross-sell them products. So this is absolutely massive. I'm going to show you some charts in just a moment, bringing the total to 6.9 million. If I'm not mistaken, this is their best quarter of growth or one of their best quarter of growth in terms of members. New products. So you're going to see more new products than there is member growth. Member growth was 717,000, while new products was 1,047,000. The reason why is they cross-sell products and they stack those products. So they won't just offer you a savings account. They'll offer you a savings account and a loan. You understand what I mean? Something like this. That's up 45% year over year for a total of 10.4 million, guys. 10.4 million. That's absolutely freaking massive. And I just wanted to show you guys a quick math, okay? Let's go to my calculator. If you're going to take this number right here, 1,047,000 by 717,000. So let's do this. 47,000 divided by 717,000. You're going to get a fraction, which is 1.46. But if you go back and you take this number, 10.4 million, 10.4 million, and then you divide it by 6.9 million, 900,000, you're going to get a number of 1.5, okay? So for you guys to understand, over time, SoFi actually increases the sale or stacking of cross products to each member. Do you understand what I'm trying to say? Like, the amount of products for the new members is less in this quarter than it is total for all of existence. What does that mean? That means that the net retention, so to speak, of every single member increases because the amount of products are cross-sold. It doesn't exactly work like that, but it's as easy as I can make it for you guys to understand. The total deposit growth of 2.9 billion, up 23% during the third quarter, to a total of 15.7 billion. So these deposits is the savings account. This is the creme de la creme. This is the secret sauce of SoFi. And Anthony Noto mentioned on an interview, that he's expecting 2 billion plus every quarter going forward. This is 2.9 billion. They exceeded by 45%. That's absolutely freaking incredible. They use these deposits. They give their depositors 4.6% annual percentage yield right now. And they use this money for their loans and their everyday business. That's why when interest rates are going to go back down, SoFi is still going to be able to offer top annual percentage yield, therefore driving in even more customers, even more members to SoFi. $68 million of growth in book value. and 171 million on a trailing 12-month basis. Finally, management raises full year 2023 guidance. This is absolutely freaking massive. And this is a quick quote, but I'm not going to read you this. What I want to show you is the actual numbers, the charts, okay? It doesn't take a genius to see. There's literally a hockey stick over here. It's like, boom. Nike would be jealous of this check mark, right? 2020, guys, around 3 years ago, they had 1 million members. They 7x their members, or nearly 7x their members. That's absolutely freaking massive, guys. Absolutely freaking massive. And if I'm not mistaken, this was the best possible quarter that they've had, period. 700,000 growth. This was also like around 600 something thousand. This looks like it was around 300,000. So it's accelerating, right? Their growth is accelerating. This to this was the highest that it's going to go up. And I'm expecting their next number to be somewhere over here. I'm expecting their next number to just keep growing. Or maybe it's going to go down. Depends on how much money they're spending on, you know, marketing and acquisition. So I'm not sure. I did hear some rumors that Sofi is going to be lowering the amount of money that they spend for acquisitions and things like that. I'm sorry if you guys hear something in the background, guys. There's like 1 million people calling me as I'm making videos. Let's keep going. Oh, yes, there you go. So they have a 47% growth. It's absolutely freaking massive, guys. Products also absolutely freaking huge, just growing. Like, it's just absolutely freaking massive, massive numbers, guys. The jumps is absolutely freaking huge. Galileo, this is something that I was looking at. So Galileo is a one-stop shop to give you a full stack financial experience for your business, a full stack financial offering for your business. Everybody was worried right here. Galileo went up to 131 accounts. Then it dropped to 126 because I believe our second largest account left us. It went back up to 129, and now we exceeded the growth. This is huge because Sofi is not just a bank, guys. Just remember that. They are a bank. They offer you financial products, solutions, and a financial platform, for example, like investing. It's absolutely huge that they keep growing their Galileo and their other businesses like the mortgage business, things like that, which falls under the category of a bank. And again, the numbers just keep going up. Lending products going through the freaking roof. Another beautiful quarter. And their lending products, you see, it just stays steady. 24%, 25%, 24, 24, 24, 23. Like it's just staying steady. This is beautiful. And their growth over here for year over year for financial products also 50%, 47%, 51. It's like they are not losing steam. They are not as aggressive as they are here in the beginning because it's really easy to jump off of these numbers. But like they're still freaking growing 50%. Absolutely massive. So I want to just go down a little bit lower and I want to show you this number right here, the financial supplemental. Here, lending products. Okay, good. Right here. This is what I want to show you. So most of the money for Sofi comes from lending segment. Student loans, personal loans, home loans. Over the last year and a half, 2 years of the moratorium, year and a half, whatever, most of the income is coming from personal loans. Home loans, literally sucking eggplant. Student loans, sucking eggplant. Just recently, we learned that student loans, the moratorium is going to be over and people have to start paying back, but they have a year to start paying back. So I guess people are noticing and they're starting to refinance. Now, Sofi, if I'm not mistaken, don't quote me, has like 60 or 70% of the entire market for private loans for education. And the private loans for education, like 95%, I believe, is federal. So that market is very small. So if it grows, Sofi is going to keep attracting more customers, keep getting more loans. But this is what I want to show you, okay? Student loans jumped from 395,000 to 919,000. Just for context, quarter four 2022, it went from 405, then it jumped to 525, then it dropped down to 395. This is the first quarter it's been up like this massively. I think it's the best quarter they ever had. I'm looking at the numbers right here, right? Massive. So student loans are coming in, and a lot of people were very questioning that. Look at that. Full year 2022, student loans went to 2.2 million. I'm sorry, 2.2 billion. That was down from 4.3 billion. Let's see what's going to happen for 2023. And I have a feeling 2024 is going to drastically outpace 2021. Okay? I figure they're going to be doing over $1 billion per quarter in 2024. Personal loans, guys. Personal loans is also going up, but the personal loans slow down. Okay? Personal loans slow down. Personal loans went from quarter four 2022 to 2.4 billion. Then it went up to 3 billion, 3.7 billion, and now it's just under 3.9 billion. So that's still going up. But look at this, guys. Home loans. Home loans is still increasing at a really nice pace. Home loans went from 100 billion. Home loans went from 100 million to 90 million to 43 million. Now it's at 356 million. These numbers are going up. Altogether, their total originations are going up nicely, guys. They're going up nicely. We need to break this number right here. We need to break in 2023 that 13 billion mark. And it's very important to understand that these home mortgages are literally because of Wisdom Capital, right? They acquired the mortgage company. It's absolutely freaking huge. Sofi is literally doing their thing. Now, this is Sofi's price today, up 8.8%. That's how we finished the day. But if you go back 5 days, Sofi literally went up to $7.42, and then it just dropped to $6.71. It makes no freaking sense. And then today, Sofi bounced back up. It's very important to understand that over the last year, Sofi is only up 35%. Sofi should be right around this $10 level right here. I think there's a lot of growth potential. Now, this video is going a little long. It's already 20 minutes. But I have an interview from Anthony Noto, and I really want to play this. It's only 4 minutes long. I didn't listen to this fully yet, but I want to listen to it, so why not play it on this video? Guys, Sofi, at the end of the day, is a beast. I have full faith in it. And if you have any questions, just listen to Anthony Noto. He's an absolute animal, guys. This guy is delivering left and right. Let's check out him speaking. Let me know down below what you guys are doing with Sofi. And yes, I did buy the dip. I took the opportunity. I sold covered calls for Palantir. I took my money and I ended up buying Sofi shares. And if you want to know how to sell covered calls or cash secured puts, become a channel member or just support the channel for $3 a month. I have a link down below. If you don't want to, that's okay. I love you all anyways. Let's listen to this video. It's going to be about a 4.5-minute interview, and then the video will be over. Have a great day.
Let's get to Sofi CEO Anthony Noto joining us in a first on CNBC. Always good to see you. Student loans, at least the analysts seem to be a bit short here. Let's get to Sofi CEO Anthony Noto joining us in a first on CNBC. Always good to see you. Student loans, at least the analysts seem to be a bit short here in terms of what they anticipated. It may have come in, I think on the call, you sort of seemed to indicate you expected that surge. But tell us a bit about that and what you're seeing there, whether it's the cadence, is it a one-time thing, Anthony, and it gets back to normal, or is there going to be significant demand for these loans for some time?
Yeah, so David, I think there's just a misperception that student loans were a big driver in the quarter. They were not. 67% of our absolute growth in revenue dollars was from non-lending, so our technology platform business, as well as our financial services business, which includes checking and savings, investing, credit card. We did see a recovery in the student loan business from about $400 million of origination volume to $900 million of origination volume, but it wasn't that big of an impact on the overall P&L, just given how those loans are valued. So the bigger driver of it was the really strong performance from tech platform and financial services, and still continued strong demand for personal loans. On the student loan side, to answer your question specifically, we think it will be a slow, steady, gradual increase over time, and that we're not going to get back to where we were in the fourth quarter of 2019, which is about $2.4 billion origination volume a quarter for some time period, probably not until 2025.
Got it. Well, on the call as well, you seem to try to focus the analysts on the technology platform. Explain to our viewers what you're talking about here, Anthony, when you say the pipeline there is pretty visible and it's the most robust I've seen. Just explain what exactly that means.
Sure. Our technology platform has a number of different products, but we're essentially providing processing, debit and ACH processing on the platform with a number of APIs that allows a developer to build just an app on top of it. It could be for a consumer-facing bank. It could be for B2B services. It could be for government payment services. In addition to that, we have what's called the core banking platform, which is branded Technisys, which is really an operating system for different products, whether it's checking or savings or a credit card or loans. We bought two businesses over the last 5 years to really power Sofi, but they also power third parties, about 135 million accounts and over 8 billion transactions a year. And so what we're seeing in a big way is traditional banks, large incumbent banks, looking to upgrade to a modern processor, which Galileo is in the cloud, as well as a modern core. And so we've, throughout the quarter, have been responding to a number of RFPs from the largest banks in our country as they're evaluating updating that technology. We're also seeing a lot of demand from other incumbents that want to switch to us that are not big, large banks, but they are financial institutions, or they have a large amount of payments or direct consumer offerings in terms of checking and savings accounts or other financial products. So seeing a nice pickup there and a need for the industry to upgrade their ability to manage assets and liabilities in real time.
Anthony, it's Sarah. You sounded pretty upbeat about the macro environment on the call. Can you tell us, first of all, you have a unique demographic that you serve, and what sort of consumer trends you're seeing so far into October?
Yeah, so I want to be very clear for the audience that SoFi is taking market share from incumbents. And so we're not really a key indicator of the economic environment or the cycle. We're a secular grower, which means we're gaining market share from an existing market, even if that market's not growing. So we're still seeing very strong demand for our loan products that are very differentiated. Our SoFi checking account, we offer 4.6% interest, no fees. You get a free certified financial planner. You can pay anybody, anywhere with your phone or debit card or P2P by just having their phone number. That product is seeing a significant amount of demand as well. And in that product, we are seeing an increase in deposits per account, which is more of a measure of how the economy is, as well as increased spending per account, as opposed to just being driven by new account openings. We're also seeing good increases in AUM. That's in our invest business. That's clearly a market share gain on the back of doing 3 IPOs. So we're still seeing really strong demand for our products. I would say more broadly, if we're going to be in an environment that's higher for longer, I'm really worried about the conditions in the financial industry more broadly. And that will cause us to be more conservative and more balanced to make sure we maintain the right safety and soundness of our balance sheet and our ability to serve our members.